Hi, this is Mike Larson from Money and Markets TV. Finally, Fed Chairman Ben Bernanke came down from his ivory tower to speak to the unwashed masses. Following the Federal Open Market Committee meeting on Wednesday, specifically, Bernanke took questions from the press for the first time ever. So how'd it go? Well, he didn't trip walking up to the podium or put his foot in his mouth, but he did show once again that he is completely out to lunch on inflation, the dollar, and his role in destroying our standard of living. Now look, there's no doubt that the Fed's interest rate and easy money policies are a huge reason why the dollar is cratering and commodities are soaring. Yet Bernanke kept trying to blame things like geopolitics and emerging market growth. And while he said that monetary policies aimed at controlling inflation are good for a country's currency, he refused to adopt any such policies. There is one thing Bernanke did get right, and that's when he said, quote, "America has a very serious long-term fiscal problem. The fiscal deficit is simply not sustainable, and if it's not addressed, it will have significant consequences for economic growth and our financial stability," end quote. But here's the thing. By monetizing the U.S. debt and buying something like 85% of the treasuries the government's issuing, the Fed is enabling the government to run those very same deficits. Bernanke seems to think that it's the delivery of his message that's at fault. That by being more transparent, holding a press conference instead of just issuing a post-meeting statement, that we'll come around to his side. But it's not his delivery that's the problem, it's the message itself. The Federal Reserve is not helping the average American. It's helping hedge funds, speculators, and big money investors at the expense of people who don't own stocks and are just trying to keep food on their tables or gas in their tanks. Just consider, since last August, when Bernanke laid out the case for a second round of quantitative easing, crude oil prices have risen 59%. Retail gasoline has surged more than $1 to $3.88 a gallon. Cattle futures have gained 18%. Wheat has rallied 26%. Soybeans have jumped 40%. And corn has skyrocketed 92%. And then there's the precious metals. Gold is now trading at a record high, around $1,530 an ounce. And silver prices have exploded 172%. Meanwhile, the broad dollar index has collapsed to its lowest level in nearly 3 years, and its lowest ever against the Singapore dollar, the Australian dollar, and the Swiss franc. Moreover, inflation shows no signs of slowing down, according to both the University of Michigan and the Conference Board. By one measure, Americans now expect prices to surge 6.3% next year. That's a huge inflation rate acceleration from what we're used to. And finally, let's look at the housing market. After all, the trillions of dollars the government spent were supposed to help struggling homeowners and mortgage borrowers, remember? Well, thanks to QE2, they're now getting lower bond prices and higher interest rates, exactly the opposite of what Ben Bernanke promised. Meanwhile, every gauge of home sales, construction, or housing prices shows stagnation or actual outright declines. What it all boils down to is this. Bernanke is destroying the value of your dollars. He's helping to drive up your cost of living. He's forcing seniors to take their hard-earned dollars out of safe investments like CDs and plow them into things like junk bonds. He's driven interest rates up, not down, and his policies have been a dismal failure when it comes to re-energizing the housing market. If this is success, as some economists say, I'd hate to see what failure looks like. As investors, you have only one choice in this environment. As long as Bernanke and the Fed are going to get their monetary policy dead wrong, you have to take matters into your own hands. Consider buying gold, and consider buying shares of companies with higher yields than treasuries, as well as a large percentage of overseas revenue. Also, buy currencies, stocks, and short-term bonds of countries with better economic growth and sounder monetary policy. They'll help you protect yourself and even profit in this environment. I'm Mike Larson for Money and Markets TV. Thanks for watching.